Hello, everyone. We're so excited to be here for what will be a very, very good session. We've heard a lot about the challenges this morning, and I'm pleased to be joined by two fantastic female leaders who bring an important financial weight to this conversation, helping with the solutions. The Honorable Reta Jo Lewis is the chair and president of the board of directors of the U.S. Export-Import Bank. She was formerly the senior fellow and congressional lead at the German Marshall Fund, and then before that, the first subnational special representative for intergovernmental affairs at the Department of State. In both capacities, I've gotten a great deal out of working with the chair. Ms. Biswal is the deputy CEO of the U.S. International Development Finance Corporation. I first met Nisha when she was working at the U.S. Chamber of Commerce, leading the U.S. India and U.S. Bangladesh Business Councils, and then before that, she also came from the State Department, capping out at the Assistant Secretary for South and Central Asia Affairs. So clearly my next job has to be at the State Department because they catapult people really into great places. So I'm a big fan of both of your agencies and the weight that you can bring to the table. Whether it's competition with China that we heard about in the previous session, financing gaps that exist across these supply chains, all the way from the minerals to the deployment of these new clean energy technologies as we pivot to a minerals-based economy, you guys can come in and be able to support specific projects abroad, at home increasingly. It would be great if you could maybe describe your agency's main goal as it pertains to the administration's priority in securing supply chains to support the clean energy transition, and maybe give an example of a project you funded that really delivers on that commitment.
Great. Well, first of all, just fantastic to see this SAFE Summit come to life in such a compelling way. DFC, we are in our 5th year. Newest U.S. government agency, our predecessor was OPIC, but in fact, Congress passed the BUILD Act, particularly in response to the need for the United States to have a more competitive, more compelling financing for global infrastructure and energy needs around the world that brings development impact. And so the BUILD Act created DFC. One of the major areas of focus for DFC is in infrastructure and critical minerals. And so I, in fact, was just at the Indaba Mining Conference in South Africa with Reta Jo and with Abigail just last month. And it gave me an opportunity to see some of the incredible work that DFC has done in this short time. Not only have we brought elevated and accelerated financing globally, but particularly in the critical mineral space. In the last 2 years, we've provided $730 million in financing with a very robust pipeline, looking specifically at the key minerals that we're seeing supply chain constraints around. So a graphite mining operation in Mozambique, where the offtake will come to a EV battery factory in Louisiana. Innovative rare earths mining operation in South Africa, where we're taking the tailings of a previous gypsum mine and reprocessing them for rare earth minerals that can be used in the permanent magnets that are used in space exploration, defense technology, and in wind turbines. In a partnership with an American R&D tech company in Florida, K-Tech. Really interesting and fascinating operation there, because not only is it providing critical minerals, but we're actually doing this in a way that's completely environmentally sustainable. Because we're not only processing previously mined earths, but in the process of doing that, reducing and getting rid of the tailings, which are an environmental leftover from the prior mine. But more and more operations like that around the world, and looking at early stage investment in companies like TechMet, which through an equity investment allows us to then be able to be involved in more and more new mining operations and be part of more critical mineral projects around the world. So I think it's a strong start for a new agency, but with incredible promise as we look to the future.
Yeah, 9.3 billion in the last year is nothing to shy away from. Very impressive stuff. Chair, you have this mandate globally, but also newly at home too. So I'm curious, how are you kind of manifesting this administration's goal around securing supply chains?
You know,
through EXIM?
Abigail, first of all, I totally agree with Nisha. To be able to look around the room and to see this level of individuals, companies, organizations that are now with a sense of urgency for all of us focused on critical minerals is fantastic. I was just saying earlier this morning that 2 years ago, we were not all of us were not in the room. The industry was in the room, but now all of us are coming together because we understand what we all have to do if we're going to be supporting clean transition in the coming future. You know, EXIM Bank, for those who do not know, our mission is very clear. 90 years ago, when we were founded by President Franklin Delano Roosevelt, it is the same mission then as it is now, to facilitate exports and to support U.S. jobs. In doing that, it actually allows us to really work with so many of you and our partner nations, our friends and allies, who are looking to partner with U.S. Businesses to purchase goods and services. One thing about EXIM, which is very, goes to the core of the work we do, providing whether it's direct loans, whether it's working capital guarantee or our insurance products, that is what we have to offer all of you who are in this business and in this industry. You know, one of the things that has really become very clear for us, though, as we were all coming out of COVID, is very clear to the president, is that we needed to secure our supply chains, especially in the critical mineral space. And so when the president asked all the government agencies to look to see what existing tools that we have or what did we need in order to support American manufacturing. So, you know, I'm really happy to be able to continue to voice how our board voted last year on a brand new initiative called Make More in America. You've heard the president say we need to make more in America, we need to export more from America. Well, this particular initiative or this particular financing product allows us to support for the very first time those who are looking to grow or expand domestic manufacturing. Now, with that product, of course, it must have an export nexus. It has to have a strong jobs component, and then, of course, it has to meet the due diligence work that we do on all of our transactions. We're very happy that we have, in a few short months, authorized two important loans. One to a company called Aquatech out of Pennsylvania, which is going to help them provide supplies and laboratory work for those who are extracting and working with lithium products, but also a company called Beta, which is a manufacturing company and one who is expanding their charging infrastructure out of Vermont. Aquatech, we were awarded $4.7 million, and with Beta over $169 million. But our pipeline is so strong. We have about $21 billion in our pipeline right now. And so we want to be in front of audiences like this because we want to talk about the work that EXIM is doing and the abilities that we now believe, not only with products like Make More in America and the traditional ones we have, but additional products that allows us to have more infrastructure so that our companies have the ability to compete against all around the world.
I think that's great. The fact that we have more U.S. manufacturing will enable both of your agencies to then have that cross-border movement that is a conditionality of the money that you can provide to projects abroad. So it's wonderful. And Beta in particular is in need of critical minerals for their electric airplanes. Solid-state batteries is on their kind of radar. And so maybe there's some connective tissue to the work both of you guys are doing in other jurisdictions. I want to pull on something that Nisha mentioned, you know, the connectivity between the Mozambique graphite project and then the Louisiana spherical graphite project that has received both LPO and as well as DOE MESC funding for grants and loan programs. And so that's a great story, right? We're really connecting the dots between what is happening, for your investments abroad, and then bringing it back to further beneficiation or transformation in the U.S. market, and hence the name of this panel, right? So I want to hear from maybe both of you more on how the coordination is going across all of these really great initiatives throughout the administration. Is there more happening behind the scenes that we should know about, and making sure that these dots are kind of connected?
Absolutely. There's a very strong interagency, intergovernmental coordination. First of all, you have the Partnership for Global Infrastructure, PGI, which is looking not only across the U.S. government, but also then in partnership with our G7 partners to look at critical infrastructure opportunities around the world, including I had an opportunity, Reta, Joe, and I had an opportunity to go to Lusaka after Cape Town to go to the PGI Investor Forum, where we talked about the fact that, investing in mining operations is not just about the mining operation, but it's all the infrastructure that goes around that mining operation, the transportation, the energy, as well as the economic investments in those communities. And so that's another great example of coordination within the U.S. government, but we also have regular IPCs around critical minerals that are looking at what every agency is doing and what are the opportunities for collaboration, for coordination on where investments are coming in on the domestic front versus the international front.
I think, Abigail, one of the things that we've definitely seen is how people are amazed at, in this particular government, in the Biden administration, how all of us are looking and working together in what the president calls a whole of government approach.
That's right.
That whole of government approach allows us to understand that where one agency begins, another one ends, and where one ends, another one begins. But we also know that we cannot do it by ourselves. We have to have the private sector. We have to have organizations like SAFE and so many others who are helping to bring all of you together to make sure you understand the types of financing facilities and the financing solutions that agencies like EXIM and DFC have to offer. I think one of the things that we're really excited about over this last year, just starting early in the year, was the first huge conference. I think that the U.S. took a big delegation together, was in Saudi. Then, as Nisha said, we were in South Africa. Then we were in PDAS, and so on and on. But it is not just about going to a conference. It's really about America showing up, and America showing up in force. Because we have been absent, not just as us as a bank who was closed for a number of years and could not do deals over 10 million because of the lack of a board quorum, but because as America, what we're finding out is people want to do business with America. The foreign buyer we want to work with all across the world, because this is this critical mineral space is one whereby none of us can do this work alone. We have to do it also from a bilateral perspective, but more importantly, everyone now is talking about what's going to be the multilateral approach that we have to take when we're working with our friends and allies. And so when you're in rooms like this and you see the friends and allies and you see the private sector and you see nonprofit organization and you also see the private institutions, which are now not just the private equity and the family offices and the venture funds, but also our commercial bankers who are all in this process together. And they all know that all of us working together is going to come to benefit the companies that want to do business here in the United States, as well as our American buyers who we want to be out there bidding on projects, but not just bidding, but also winning.
Yeah, we heard from almost in the opening conversation about how Chinese players and the government show up in full force to bring kind of their opportunities to the table for investment, for offtake, and for the U.S. to be participating internationally in these conversations in the upstream, right, in the mining sector, which hasn't enjoyed the great reputation that some of these new clean energy technologies have had. It's a really good show force, and to have wallets there too, I think is very helpful to move away from, just these commitments at a high level, but to real action. And so with that, maybe I'll skip ahead to my last question and we'll come back to some of the others. But, the chair, you really teed up this this togetherness, the need to kind of collaborate. And so I'm curious, how does it work with the other development finance institutions, the other export credit agencies? Do you guys coordinate with that? There's a huge price tag to some of these projects. And so does layering your loans help? Does coordinating due diligence help? Is this something that's percolating now?
Well, you're absolutely right. One of the things that we spent some time on was how we were able to allow folks to understand what we could do for them as in their particular projects. And so we've signed over last year about 20 co-financing agreements. We signed about 7 MOUs, and I will tell you, with other ECA organizations. One of the things that was critical in that was for us to be able to understand how each other worked. In some of those co-financing agreements, we also agreed to have what we call a one-stop shop. And in that one-stop shop, one can go to our website and be able to be talking and coordinating with 2 agencies or 3. We've signed also a quad agreement last year, which encompassed 4 of the ECA organizations. We think that is very strong and is very powerful because we don't have time to be introducing ourselves to each other. We need to be spending time on the work that you bring us because you need that type of financing. And so with those co-financing agreements that I'm telling you ranged everything from the Australias to the Swedes to the Middle East, I always call it North, South, East, and West, who we were working with, allows us, I think, at this juncture, to be able to move up a lot faster. We all get labeled with, bureaucracy and government's too slow. But one of the things of working with the private sector and then working with other like-minded ECAs, it does provide us the opportunity to be able to have that commonality that we all share as we're doing our own due diligence, as we're looking at the different, we all worked as a part of the OECD arrangement, so we operate under those rules. And so when we have that commonality of trying to move a project forward, we don't have to spend time trying to get to know each other because we do know each other very well and we get together on a much regular basis. And I will tell you, in every one of those co-financing agreements, critical minerals was right there as one of the pillars that was holding up the agreement as the work that we wanted to support.
I will say, however, one area where I think we can make some process improvements is on aligning our diligencing so that it doesn't have to be duplicative, right? So the extent to which we're able to take some of the diligencing information from a partner DFI, I don't think we're there yet, but I think those are the areas where we see an opportunity to create some efficiencies, both for the companies that are seeking that financing and actually to be able to move forward more rapidly into providing that. So I think this is an area where I've also heard some murmurings in Congress on supporting that kind of an effort, since some of our diligencing is statutory requirements and regulatory requirements that we're trying to certify to. And so I think you're going to see some progress in that area in the months, hopefully months to come, maybe years, but I think that that's something we all see as a real need.
Yeah, we've seen a lot of this on the standards front, right, where there's this desire to coordinate converged standards, to create kind of that bottom level and then go above it as we can kind of support the development of these projects. And to do that on diligencing is only going to speed things up more, which we desperately need. So what are some of the challenges that you guys are facing in getting this capital out? You alluded to Congress being able to maybe tweak some things for you. Maybe the staffers from the previous panel are still in the room and can hear some good recommendations on how your really important agencies can be strengthened to meet the challenges of the day, and specifically for this very complicated critical minerals like revolution we're experiencing.
Well, one of the things that we're definitely have been working a lot and very much in a bipartisan way, and in being able to enjoy that bipartisan support for EXIM is really very important because of the issues that we face. We have constantly been in conversations about having alleviation from our default rate. EXIM has a 2% default rate. We also have been in conversations and have seen much improvement about a carve-out for what we call our China Transformational Export Program, of which we have basically tucked critical minerals under that particular mandate. Those two areas are really important for us at EXIM, and as we get ready for our reauthorization in 2026, you will hear us talk more about that, because when Congress reauthorized us in 2019, they allowed us to have some additional flexibilities when they gave us a mandate around our China Transformational Export Program. And then, of course, it allowed us to make more financing in the small business arena, make more financing available in sub-Saharan Africa, and then, more importantly for this audience, renewables, energy efficiency, and energy storage. So those mandates are important for us. Congress gave EXIM Bank about $135 billion lending cap. We have spent a little north of about $30+ billion. Last year, we did about $8.9 billion of authorizations. And so one of the things that I think is important for this audience is to know that at US EXIM, we do not have a sector limitation. We do not have a cap on the type of funding. We can do very, very small, and we can do, of course, in the billions. And I think people even saw some of the work that we could do most recently when we were funding a Sun Africa deal in Angola on solar to the tune of about $907 million. So I think what we're saying is that we're looking for the projects. We're looking for the bankable transactions. And the people in this audience have them. And so we are really out and about, as aggressive as we can, to talk about who we are and what we need to do in order to move, to help solve the global problems.
Great.
And, you know, for DFC, we were authorized through the BUILD Act. Our reauthorization, our authorization expires in 2025. So that's a great deal of urgency for Congress to reauthorize us. And in the process, I think there are a few things that we're looking at to really sharpen the toolkit and to strengthen our ability to get more financing out more quickly. So let me just give a few. First, of course, is getting that reauthorization done, but also extending our maximum contingent liability. BUILD Act brought us from $30 billion to $60 billion. I think we could probably use another doubling, because we're already at a global exposure right now of $44 billion. In just 4 short years, we've really come up that exposure. So that's one. Country eligibility. Right now, we are very much tied to World Bank income levels in terms of country eligibility in low income and lower middle income, with some ability to be in upper middle income countries where we have a developmental and or a national security nexus. But I think moving towards a different categorization of eligibility, country eligibility, will create some more flexibility, particularly in the critical mineral space. And then our tools. Congress, I think, through the BUILD Act, expanded our toolkit to include equity. But unfortunately, the way that equity is scored, we're actually charged almost as if it's grant assistance. So it eats up a lot of our subsidy, which sometimes limits the amount of equity we're able to do. I know that this is something that is very high on the list of Congress. The members of the China Select Committee, you know, who were on the panel earlier, they have opined on this. And so it's just a question of getting the right fix and getting the political momentum to get that done. And then there are other areas where we can see some small tweaks that can really help us boost our ability to get both attract the right talent and then to be able to get the financing out more quickly. So I think, you know, 2024 and 2025 are going to be really important years for DFC in that sense, and we're looking forward to a DFC on steroids as we move forward.
Well, I asked you both about problems, and you gave a ton of great solutions and a lot to be optimistic about. I hope you'll join me in applauding these two incredible leaders on the work they're doing. Thank you so much for being here today.
Thank you.